Welcome back, everybody. Want to get into a quick market update for November in light of everything that's transpired in the last 48, 72 hours. Let's go straight to the S&P 500, the futures chart. We have talked about the fact that this has been the strongest of all the major markets with a type 2 deep crab. If you recall, really quick, the June reaction got rejected at target 2, 42.78. Support, minimum support, has been 37.75, but confirmation did not come in until mid-October at 35.75, and that was the low. So the progress, bullish engulfing, follow through today says we have a target 1 objective at 40.60 minimum, but since this is a target 2, a type 2 reversal, target 2, 42.78, is not out of the question. Clearly, whatever HSI develops between 40.60 and 42.78 is going to spell out exactly the location in this area, but we've got some follow through. This has done a pretty remarkable reversal just in the last week, and any issues with rolling over, failing for the year is over off of that pattern for now. Maybe we come back next year at some point, but for now, we have to assess the target 1, target 2 range. Basically, 4,100 to 4,200 is the general area now in play. This lines up also with the industrials. And we've talked about the Dow diamonds, the multiple patterns there. The diamonds have done something that where it's changing. If this continues to go higher off of this secondary reaction, because we've been looking at the 30 on the Dow diamonds, roughly 33,000. Okay, we're 33,600 at the moment for this kind of return, but we haven't violated the uptrend. Look, the Dow diamonds still aggressively trending higher, but do notice that we've hit target 2 off of this deep crab. So interestingly enough, the diamonds hit an area, going back from this initial crab pattern that completed much like S&P, crab pattern in June, July. Then you got your reaction, then you came back down, and in doing so, you have another butterfly. So it's a type 2 off the deep crab. A strong reaction off the butterfly. What do we need to see? Well, where's HSI? What are the indicators doing? They have flashed overbought signals, but we're looking like HSI needs to come up and give us yet another register, maybe one more, before we can have another inflection. Take a look by next week. What happens with our amplified RSI? Does that come out of the zone? Because it's still overbought in the extreme. That is not out yet. Been quite strong. The other thing that I wanted to highlight with the weekly chart on the diamonds, the industrials are the same way on the index. Just simply what the retracement has been off the COVID low. This is completely different. That's a completely different situation than the NASDAQ. We never even got to the 50% point of the COVID retracement. And the obvious resistance point, again, you go back to the July peak. Once that's violated, that's the event to really watch for. If that starts, breaks out above, what is that, 34,300, okay, then you don't have much room until the 886. Okay, amazingly, where the diamonds have been and as threatened as they looked, look, you're already back to the 50, above the 50% level at 328, 32,800. 886 is 36,000. on the index. On the diamonds, 360. The final one is S&P, is the NASDAQ. And NASDAQ looks like this. This is the most important thing about the NASDAQ chart. It's been very sloppy, but our weekly HSI has confirmed, which now opens up the door for coming back to 13,000 off of that move. We'll update this more next week in our sessions, but very big events this week. Our targets are now going to shoot higher in the short term. We'll deal with the longer consequences at another time, but for now, with that massive engulfing, NASDAQ continues to go higher. I say 13,000. That's another 1,200 from where we are. We'll look at more next week. Thanks, everybody. We'll catch for more gold member, silver member updates on the page, and we'll have a new 3 ideas next week as well. Take care.